Good morning, everyone. Welcome to Ainsley News, Friday, 5th of November. End of week news. So today we're talking Aussie Property and Rising Rates, the largest property correction on record. Gold and silver had strong rallies last night, reclaiming what was lost after the Fed taper announcement and more, whilst the financial markets rejoice at the Fed maintaining zero interest rates for longer and only very slowly reducing quantitative easing. The realisation that this will do nothing to quell surging inflation is returning to the investment narrative. Of course, inflation can be great for Aussie housing, but when that is largely driven by near zero interest rates and huge loans amid tepid wage growth, the question inevitably becomes one of what happens when rates rise. The RBA and the Fed don't have complete control of rates, and so whilst they may say rates won't rise until 2023 or 24, they may not maintain that control. As we've talked about before, the RBA have been using yield curve control, buying as many 3-year Aussie bonds as needed to maintain the yield initially at 0.25% and then 0.1% to guarantee cheap debt for years to come. As we reported at the last RBA meeting, they announced that they would end that program target at April 2024. However, last Thursday, the 3-year bond yield started climbing above the 0.1% target, and the RBA went AWOL, seeing it rise to 0.7% and onward to 1% by Monday, more than 10 times their target. The writing was clearly on the wall for their Tuesday announcement that they would no longer use our money to defend the line. RBA boss Philip Lau explained it would have been untenable to try and would eventually see the RBA own all 3-year bonds to do so, like the Bank of Japan. Writing for the AFR Coolabah, Chris Joy is warning the inevitable rises in rates could see the largest property correction on record. Yet if and when the RBA does seek to normalise the cash rate, prices should fall as night follows day. And if the RBA is able to lift rates by 100 basis points or more, it will likely be the largest correction on record. Assuming rates increase relatively promptly over, say, a 12-month period, we would expect national home values to decline by 15 to 25%. It's possible that the adjustment is smaller if the RBA moves more slowly and the value of residential real estate mean reverts partly via household income growth over the fluctuation of time. But our central case would be circa 20% decline after the first 100 basis points of hikes. It's worth noting that if we apply the RBA's internal housing valuation model to this question, we get somewhat larger numbers. The model developed by Philip Tulip and Trent Saunders, which we've replicated and refined, suggests dwelling values could drop by about 33% following 100 basis points of hikes. While renters might embrace this prospect, homeowners would obviously rather avoid it. The current investment landscape has arguably never been more difficult to read. Not a lot makes sense, but never have we had the confidence of a pandemic, staggeringly unprecedented monetary stimulus, geopolitical and global trade tensions, technological and demographic disruption, and of course a debt pile the size of this one. These are all inextricably linked and often competing influences. Such times test the mantra of the four most expensive words in investment. It's different this time. What seems irrefutable, though, is that there are many assets out there overinflated on stimulus and easy money that simply can't go on. Hard assets, such as precious metals, good quality property, if you can get it, Bitcoin stored securely are some of the better choices. Chris Joy highlights the inherent danger of relatively illiquid asset incredibly inflated by cheap money. And that's Ainsley News for today. Thanks for joining us, everyone. We do have a couple of charts with today's news, so jump over to ainsleyBullion.com.au and view the news section, and you can check out those charts. Most of it's just a tweet from Ottavio Costa, and also some capital city dwelling values, just relative to that RBA data that we've been talking about. So it's ainsleyBullion.com.au. You can also purchase gold, silver, and platinum. ainsleywealth.com.au for all things cryptocurrency, and goldsilverstandard.com for our own crypto built back by real gold and silver. Enjoy your weekend, everyone. We'll catch you Monday for more news.